Good morning, everybody. How's everyone doing today? Rise and shine. Happy Canada Day for all you fellow Canadians. Be Canada Day. Good morning. So while we wait for everybody else to trickle in, I got a message earlier on Twitter from a trader. And so basically the gist of the message was that they were trading and they were nearly up 4% last week. And now this week they took a couple losses and they're down 3%.
Good morning, everybody.
Have a
How's everyone doing today?
confidence.
Rise and shine.
And
Happy Canada Day for all you fellow Canadians.
Let's see. They have no confidence, and they decided to stop trading completely this week, but they feel lost, honestly, even scared to put on a trade. So that's your typical cycle right there that a lot of traders experience. So why would something like that happen? Well, okay, so you're up 3%. That's great, but we've also talked about how now is not a good time, ideal time to be trading the markets. Okay? So to be up 4% was lucky, in my opinion. To be down the 4% plus 3, that's because the market is not ideal for trading. I mean, that's the harsh reality right now of what we're looking at and what we're dealing with the markets. I've said that the markets are unpredictable right now. So trading it is not a good time. If you made a percentage, if you made some money in these markets, you were lucky. You were extremely lucky to make money in these markets. But you took that luck and misinterpreted it as a skill that you could reproduce whenever you felt you could, whenever you wanted to. And what ended up happening is the market taught you a lesson that now isn't the time. And so you should feel scared. You should feel scared to trade right now, because this is the market humbling you. This is the market telling you now's not the time for you to be getting involved. You got a little bit lucky, but now I'm going to take all that money back. And not just that, I'm going to take the money back that you made me, and I'm going to take back the rest of money that you made from before. So not only did it take away your 3% or your 4%, but it also took away 3% that you had. That sucks. That really sucks. And I know, because I've been there, done that. I feel for you. I know how you feel. I know exactly how you feel. I've been there. I've felt that pain. And it sucks. I know how badly, you feel. Because it was a constant struggle that I had. Was that same thing. Not knowing when to trade, and then getting in at the wrong time, and then making money, and then taking that false sense of understanding the markets, and then losing. And then realizing, wait a minute, if I knew what was really going on in the markets, why would I lose money? If my analysis was so good, why would I lose money? I mean, I knew why it was good before, because I was making money. But, okay, now why am I losing money? Well, you're losing money because it wasn't so much that your analysis was good or your trades were good. It's that sometimes you're going to be lucky, because at the end of the day, price only moves up or down, right? So if you get into a position long, you want it to go up to make money. So if it goes down, you're wrong. If it goes up, you're right. So it's a 50-50 really, although we do things to make it even worse odds. But the point I'm trying to make is that when you're trading at the wrong time, you're going to have mixed results. When you're trading at the right time, your results are almost going to be all good trades. Students will attest to this. There was a time, a real string of time, not too long ago, about 3 weeks ago or so, there was a string of time, maybe 4 weeks, there was a string of time where trades were popping out. Why? Because it was the right time to trade. and there was many opportunities. And guess what? Most of those opportunities were winners. Okay, maybe a couple little positions didn't work out, but the rest were winners. And the reason being was because it was the right time to trade. So you got to be focused on, is it the right time or it's not the right time? If it's not the right time, then you got to do nothing. Because I bet you would rather have made 0% over the last 2 weeks than to be down 3, right? Of course. You wish that your account was at, where it was before you even made the 4%. That'd be nice, just to be there. Well, you could be there. You could be there. But you just have to be patient and not think, oh, well, there's markets are moving. I could be making 2% right now. No. Don't do that. Don't do that. Okay? There was people shorting gold yesterday. Why? Because it looked like a good opportunity to short gold. With this pull, with this drop here, it looked like a good opportunity to get in short gold. Well, how's that working for them this morning? Not good, right? I wouldn't have gotten in short there. That's crazy. That's crazy. When you look at the higher time frames and you look at what's taking place, that's not high odds. So, and it's the same thing. It's always the same thing. We were responding from higher time frame demand that I mentioned yesterday. So it's going up. I mean, that is what we were expecting. Okay, and now we're seeing that. So it's all about timing the markets. When it's not a good time to be trading, don't get involved. And if you're having a hard time understanding when is a good time to trade and when it's not, then maybe you should join the school and become a member and learn about how to determine if the market is a good time, is ideal for trading or not. But the things you really want to look for are, you want to make sure that there's trends. You want to make sure that there's trends in the market. You want to make sure that, price is flowing well, like on that monthly chart, like on the 6-month chart, like on the 3-month chart. If it's not flowing well, if you're looking at a chart and you're saying, wow, this doesn't look like it's flowing to the upside anymore, then don't make trading decisions based on that. Okay? But listen, it's not easy. All right? If it was easy, everybody would be millionaires trading. It's not easy. Trading the markets is one of the most difficult things ever. In my opinion, figuring out the market is one of the greatest puzzles I think there is. And so now you're going to be affected. Your consciousness is going to be affected. Yes, it is. Why? Well, because you took some losers. You were feeling great. You had a high from your 4% gain, which is great, but that high led you to lose 7%, or if not more than that, right? Because to lose that plus the 3%. So, that sucks, and I'm sorry that happened to you, but instead of taking that and saying, oh, I feel down about that, and I'm numb and I'm this and I'm that, take that as a lesson. Take that as a lesson. As men, most of us are men here. We got some ladies as well, but speaking to the men, as men, you got to stand up and be a man. When life slaps you across the face, you don't just sit there and be numb to it. You sit there and say, thank you for the slap across the face. You're trying to teach me a lesson, so let me figure out what the lesson is, and let me make sure that doesn't happen again. And that's it, and you move on. Otherwise, if you sit there numb, you're going to miss out on the greatest opportunity for you to learn and step up your trading to the next level. You got to take that lesson and move forward. So that's what I would be doing if I were you. That's what I did with my life and my trading. Take those lessons and say, maybe I won't do that again. Okay? Maybe I won't do that again. And just sit on your hands. What's the problem with sitting on your hands? Your account would be fine right now if you just did nothing. All right? Wait until the opportunities are there. I keep saying, people are like, oh, but I need to make 2% today. I need to make 5% this week. I mean, that's the stupidest way of thinking, okay? Listen to me. It's the stupidest way of thinking. You will blow up your account. You guys are not professionals. in this industry, okay? Maybe one or two of you that are with us are, but you're not professionals in this industry. You cannot trade and day trade and make 2-3% a day unless you're a professional. You're not professional, all right? I don't do that. You know, sometimes I'll see a day trading opportunity, which I'll take. And I pointed one out on the Euro Japanese yen not too long ago that I took, and it worked out extremely well. But, I mean, you have to be at a very, very advanced level to be taking day trades, to know what you're doing, to know when the opportunity is right, to get in quickly and get out quickly and make your profit. You got to know what you're doing. And if you don't know what you're doing, it's the last thing you should do, right? So your account could be at 0% right now. And it could be at 0% for the next month, okay? Maybe 2 months sitting at 0%. You're going to have to be okay with that. You have to be okay with saying, I don't care my account sitting at 0%. Because when the opportunity is there, you can easily make 3, 4, 5, 6, 7, 8, 9, 10% on just one chart. Okay? And when that opportunity is there on that chart, guess what? That opportunity is going to be there on many other charts. So then you can pile in. And guess what? You need to have the confidence at that time to get into many positions and to build a position as price is playing out in your favor. That's when you can make the percentages. So you got to be okay with being able to sit on your hands and have your account sit at 0 for a while. And then when the time is right, you strike. Okay? That's my advice. You do what you want to do, but that's my advice. You came to me for my advice. That's what my advice is. So don't be numb. Just be a man. Get past it. Learn your lesson. Take the humbling and move forward. Okay? It's not the end of the world. You'll make that 3% back, but don't be a hero and try to force it because you'll be down another 4%. Okay? Then you try to be a hero again, you'll be down 10%. And then 15 and 20. Before you know it, you'll be at half of your account gone. Guaranteed. The market will do that to you 100% because your mentality will be completely wrong. Okay? So take it from me. Just take it easy, relax, sit on your hands. Don't be trading. My personal opinion. All right? Okay. So, Throwback Thursdays. This is where I throw it back to you, but I don't see anybody posting any charts up in here. Come on. Where's all the charts? Where's all the charts? Yesterday we had somebody posted pound Swiss. Is that what it was? Was it pound Swiss? I don't even trade that chart, pound Swiss. There's certain charts that I trade, and there's certain charts that I don't trade. Pound Swiss, one of those charts. Why? Well, because when you look at it, it looks like hell. And there's not much going on there. But, okay. You want me to look at the pound Swiss? No problem. And so let's do a top-down analysis, right? Let's start by looking at the monthly chart. What does that look like to you? Price was moving in what direction? Downwards, pretty much, right? Okay, so let's put on some obvious trend lines. Okay, here's some obvious trend lines. And it looks like it's become, those trend lines have become pretty close to being invalid. Very, 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 very close. Very, very close. Let me see. Okay, so I would do that. The good, decent chance that we have some demand down here. So, momentum being shifted from lows to the upside, shifting to the upside. Then we got one time frame higher weekly chart. Let's see. Looks like we could be reacting from some demand right now. On the weekly chart, so we got demand in play. And as price is reacting to that demand, let's see. Yeah, we're getting a momentum shift here on the daily chart. And price is reacting to the upside. So the banks are buying right now. Okay? But you'd got to be careful with this because you're making the assumption that the weekly will hold. And so far it looks like that's a good assumption to make. Because it looks like the banks are using that area of demand as a spot to start buying. So stronger pound than Swiss is what I'm seeing. That makes sense. Pound looks like it's going to be stronger over the Swiss. So over time it looks like it's going to be higher. If this area breaks through the weekly, then it's dropping down here. And then I wouldn't want to be even considering being a buyer until price gets down there to the below 122. That's what I see. That pound Swiss. Okay. That's what I see. But Bitcoin is dropping quite significantly, isn't it? Yeah, so it's dropped and it's, rebounded a few times, but overall it's getting weaker and weaker over time. So we got a 4-hour area of demand coming into play. You can see the shorter time frames pushing price up. But besides that, yeah, so we are looking at this here. That's an area of demand here. Price could even drop through that. Turn around, drop through it, and then rally. That's a small possibility. This area has been tested multiple times, the weekly area, so it's a lot weaker. So, I would want this to be taken out here, this area of supply on the daily chart to be taken out for a bigger push. That's what I would be thinking. Okay. Let's see. US Swiss, please. Just gone through supply zone and new demand formed, possible entries, etc. Okay, US Swiss, let's take a look. US Swiss. Slowly building momentum to the upside, which we were looking at. So you said just gone through a supply. And possible entries. No, I wouldn't be interested in trading this. No, don't get me wrong. I mean, yeah, I told you that it's likely going to be breaking this and heading higher, right? But remember, when price is in a range, okay, even if we have this as the opposing supply up here, that price is expected to go up. Happy Canada Day, Nazar. You don't know if it's going to do this, okay? You don't know that. It could do this. Okay, or it can do this. All right? And if you take a trade with your stop loss right there on the chart, okay? If that's your stop loss and your target is up here like that, yeah, at the end of the day, your target is going to get hit. But your stop loss is going to get hit before it. So that's not going to work out so well. So that's the reason why I wouldn't want to take that trade. Even though it's that move to that target is very likely, I wouldn't want to take that trade. If I wanted to take a long trade because I believed the opposing weekly supply was going to get hit, I would to be safe, and here's the thing with trading, okay? When you're not very confident, you always want to put your stop losses very close to your entries. That's just an amateur thing, right? You always want to put your stop losses so close to your entries because you're like, if I lose, I just want it to be a little. Well, that's what causes you to lose, is because you're so fearful, you hang on so tight. When you hang on to something so tight, you're going to lose it, right? Isn't that one of the things that we learn about love? Hold on to somebody too tightly and you're going to lose it. Well, it's the same thing with trading. You hold that too tightly and you put that stop loss, oh, I'm just going to put it so close. Oh, I'm just going to, just over here, I'm going to put it really close to entry. Well, guess what? Price comes down, knocks your stop loss, and then goes. When you become confident in your trading, what trading becomes all about is looking at the charts. Is it high probability to trade now or not? If it is, what's the direction that price is going to head into? Upwards? Great. And based on what's taking place on the chart, what the banks have created with price, where their zones are located, where is the safest place to put a stop loss? The place that price should not go to under any circumstances. Like if there was, how many chances out of 10 is that stop loss going to be hit? It'd have to be less than 1. Okay? And how do you know that? Well, you know that when you know what you're doing. So you'd have to look at a spot and say, where's the area I could put a stop loss where the likelihood of it being hit are very low? Because you could be looking at a scenario on the chart saying, okay, there's probably about 6 or 7 different things that price is going to do. All right? So let's say that's 1, that's 2, that's 3, that's 4, that's 5, that's 6, and that's 7. Okay? Those are the 7 different paths that price is likely going to take. And they all are to reach the opposing supply. And we came to the conclusion that it's going to reach opposing supply because we're looking at the dollar, we're looking at the other markets, and that's basically the consensus that we're finding. Okay? So do you notice that out of all those 7 ways that price is likely going to play out, none of them have price moving below this area of demand here? Okay? So out of those 7 different scenarios, none of them had price moving below this area of demand. So where is it that I'd want to put my stop loss? If I wanted to trade this, which I don't, but if I wanted to trade this, where would my stop loss have to be? Down there. And so now you're going to think, yeah, but the stop loss is so far, man. If you're just targeting the opposing supply, that's not a good risk to reward. Well, yeah, that's why I wouldn't trade this. Number 1, okay? That's why I wouldn't trade this. But if I was to trade this, I wouldn't just be risking 1% on the trade if I wanted to make a decent return. Because out of 7 different ways that price is going to play out, none of those 7 had price dropping below that area of demand. All 7 of them had price going to the opposing target. So why would I not risk more money? 2%, 3%, okay? Because I know that price is very likely not going to ever come down to that area and drop below, okay? That's how I would look at it. I wouldn't be putting my stop loss so close and being afraid, and then, because that's what happens. People get in big positions, they risk 10%, they put a stop loss so close, and then they lose it. That's just the exact opposite of what you should be doing. Okay? It's all about probabilities. The market doesn't care where you're putting your stop loss. It has no respect for you whatsoever. You have to have respect for the markets. You have to know what is going on. And nobody's going to give you that knowledge. Nobody can just hand over that knowledge to you. You got to put in the work. Those students that come to class, I mean, they are seeing what is required to understand the charts. And we're starting a class on Monday, by the way, July 5th. I should let you guys know that. I know that most of you know that, but we're starting a new class July 5th. So if you haven't become a student and you want to learn how to do the analysis and how to learn what's going on with the markets, you have to become a student. Become a student, watch the video lessons, join us. On Monday, we have our first class, our first classroom session, and we're going to start with looking at the USCAD chart, and we're going to start mapping out all the institutional supply and demand, as well as their trend lines. All right? Okay, so back to what I was saying. You know, it all comes down to, do you know what is happening in the market? It really does just come down to that. It's that simple. Do you know what's happening? Do you know if the odds are in your favor? If it's in your favor, great. If it's not in your favor, then you have to stay away. So I wouldn't be trading long Swiss franc right now. Okay, just my personal opinion. I wouldn't be doing it. Oil taking off, yeah, to the upside. Are we surprised? Are we surprised? Yeah. Very strong. It's going to remove the opposing. We mentioned this here in the EURJPY report. That this area of supply was very questionable. This area of supply was very questionable based on the latest analysis we were doing. The zone was very questionable and therefore very prone to being taken out. And I said, if it gets taken out, that's a beautiful thing. Because then I'll be waiting for retracements to be getting in long, because this sucker is going to fly. And we've known that. We've been talking about that for quite some time, about what's taking place on the higher time frames, right? What is taking place on the higher time frames is really telling us that this sucker is going to be a nice long-term long position. But right now, the institutions are removing. This is the lumberjacks. The lumberjacks are in the forest, and they're cutting through the forest. They're cutting through the trees. They're removing the obstacles. That's what's going on right now. They're removing the obstacles, removing, and they're constantly being refueled. Okay, as they're doing it, eventually they're going to be tired. They're going to be exhausted, and they're going to have to come back to base, refuel, and take off again. So that is what I'm waiting for right now. Wait until they get tired, wait until they head back to base, and then when they're regrouped and they're ready to take off again, that's when you want to get in. All right? So this will be a very good long position soon. Soon. I would not be getting in now. Why? You get in now, then price retraces, you're out. Then your account's going to be in the minus. So let it fly. And don't think like, oh, I'm missing out because it's going without me. No. Don't worry. It'll come back. All right? Things don't fly forever. It'll come back. Just take it easy. You see this retracement to the demand zone before it took off? Okay. So when price retraces to lower time frame zones to help facilitate bigger moves, it's to help facilitate bigger moves. Okay? And those bigger moves, that they will have retracements on them. So we just got to be patient for those retracements. It'll come back. Don't worry. So it's getting stronger. Let's take a look at the Canadian dollar. It hasn't broken through the highs yet, so we're still waiting on that. USCAD, please, Kev. Yeah, no problem. Yeah, USCAD, it's Canada Day, so let's take a look at the USCAD. So, USCAD on the weekly chart, still holding the descending trend line, but it is on the verge of breaking through here. I suspect that it's going to do this. That's what I suspect, because of what we were looking at with the dollar. Understanding the USCAD really comes down to understanding what's happening with the dollar. If you don't understand what's happening with the dollar, then forget about it. You're going to have problems trying to figure out the USCAD. So this one, it has more strength. It has more strength at the upside than the USCAD right now. So why is that? Something is holding the Canadian dollar. Something is holding down the Canadian dollar. Well, yeah. So it's the strength in the Canadian dollar because of oil rallying. That's what's happening right now. Oil strong, Canadian dollar strong. When the Canadian dollar is strong, it causes US CAD to drop. But the US dollar has been somewhat strong. So you see how it's holding in this range? You see how on the 4-hour chart, the high was here and it has not broken above it. Okay? But if I switched over to the dollar, and you look at the 4-hour chart, look at the high here. You see how it broke above it? Okay, so the US CAD is very strong right now because of oil. Now, the thing is, how much stronger is oil going to be? How long is this strength in oil going to hold on for? I would say, just looking at the chart, looking what needs to happen, I would say for the midterm, we're probably going to continue getting strength. Okay, midterm, many days, many weeks, we're probably going to get strength because there's opposing supplies that have to be removed, and that requires price to continue heading higher. Okay, so once those areas are removed, then we'll have those obstacles removed, and that's typically when price will exhaust itself and then reverse. So if it reverses, it's going to get weak, which could then allow the US CAD to start heading up. Okay, it's going to play catch up because right now you see the dollar rallying, right? And this one's kind of holding it down. So, so if the midterm it's going to be strong, then that means in the midterm we'd expect price to continue sideways. Over the longer term, if we expect oil to exhaust itself and turn down and drop, then we would suspect that, with it becoming weaker, this will play catch up and we'll see higher. Okay, this is just my intuition. This is just my analysis based on what I'm looking at. In terms of oil, the dollar, putting all the pieces of the puzzle together. This is the Sherlock analysis process that we talk about so often. All right. So over the longer term, yeah, we could see this play catch up, rally up to supply, and then after oil makes a retracement, contacts some institutional demand, and prepares to shoot for the moon, this sucker's going to drop. I mean, we've been talking about this one dropping for a long time. Our conservative targets of 122 have already been hit. That was a beauty. But we have targets even further down that we are expecting to be hit. Okay? So that's the analysis for US CAD. Any other charts you guys want to look at? Let me know if there's any other charts you guys want to look at. Can you hit the like button? Now's a good time to hit the like button. We got 21 likes. Can we get it up to 35? We got 43 people here. We shouldn't have any issues getting to 35. Can you guys help me with that? Get this up, these likes at least to 35. Retracing oil with US dollar strength should do the trick for a stronger US CAD. With a stronger with US dollar strength should do the trick for a stronger US CAD. Yeah, I think the US dollar still has a little bit more to go to the upside. That's what my suspicion is. Let's look at the euro. Yeah, same thing. Did you guys see the euro yen? That's one I'll point out. You see that strength? I mean, talk about knowing what's going to happen in the market before it happens, right? I mean, come on. So this this strength should continue. You see how well it's holding up? The strength. Look at the US dollar Japanese yen. Look what's taking place here. Okay? Remember I said it's very likely can go up and test deeper into this area of supply because of the US dollar strength. Okay? So that is helping to support that euro Japanese yen. So it'll take a little bit longer for the euro yen to play out and do what we are expecting it to do. I detailed it in the observation journal. So we're waiting for that chart signal to get in. But yeah, oil is the flyer today. Wonder what is causing that. Well, we know what's causing that. But wonder what they're saying in the news, what's causing it. Has anybody looked? Oil price. Let's find out. News. Tool. The past hour. Let's see. OPEC and its allies were heading for a meeting that will be crucial for oil prices, with discussions continuing about whether to keep increasing production. Meet for talks that may prove crucial for oil prices. Well, one of the things that's helping for price to rally up strong is that they're trying to shut down the oil market. So it's causing prices to go up. And that's why gas prices are going up. Everything. They're trying to shut down the oil market on purpose. Gas over $3, and if OPEC doesn't act immediately, gas will continue. Yeah, so that's what's helping to fuel that move. But at the end of the day, what's causing it to move up right now are the banks. They're removing the obstacles. They're paving the pathway for a very, very large move in oil. Okay? Very, very large move in oil. So just be ready for that, because it's coming. You think gas prices are expensive now? Oh yeah. Well, you wait and see what's coming. Euro, US dollar, 6 month, 3 month. Yeah, we can do that. So the candles have ended. January, February, March, April, May, June. That's 6 months. So now we're starting a new candle on the 6 month chart right here. Okay. So we got a nice bullish engulf above that area. Good. Drop. And we'll see what ends up happening there. As in terms of the 3 month chart, so we have this trend line becoming invalid, price rally, drop, stopped, and now we're getting a new candle. So not much has changed. Not much has changed. It still looks good for a continued move to the upside from here. I don't think price is going to drop below here. I think it's going to just head higher from here. That's what I see. That is what I'm seeing. Okay. Let's see here. Any questions? Yeah, OPEC meetings today. So, but like I said, you know, they could be using the news to help push price up right now. That's definitely what is being done. But at the end of the day, the plan to remove these areas of supply, they were there. So that's why you were seeing the strength, okay? If the news continues, which it probably will, continue to be bullish, it's going to lure a lot of people into getting long. And that's when they're going to switch out their long positions, close out their long positions, cause price to retrace, and then sucker everybody in short when price is very low after the retracement, and then they will reverse price. Okay, so I think we should leave it at that. It's about 40 minutes. It's a good enough time. I think we covered a lot. I think we're good to go. If you do have any questions, leave it on the bottom in the comments section below, and then we can get to them. But we covered a bunch of your requests today. I hope you enjoyed the show. Did we get those likes up there? Let me take a look. Yeah, we did. Good. 35. Yeah, I'll deal with 35. We should be getting a lot more than that. that's okay. We'll slowly build up our viewership. I mean, what we're offering here, I mean, this knowledge is